It's 90 minutes before the open on Friday, December 17th. Hello, traders. Let's take a look at yesterday's picks. Let's take a look at the market. Let's see what's shaping up for today. First, I want to make sure that I'm looking at my previous day's picks because that's how you can tell if this system actually works. I'm not showing you some photoshopped P&L or cherry picking. I am showing you the trade setups. I'm telling you why the trade is setting up, and you're able to take advantage of that trade, get in the position, see how it's panning out. This is a real-time experience. So the video yesterday was released before the open. You had every opportunity to trade these picks and to see if the setup that I was looking for actually played out. Costco. That was a long that I highlighted yesterday. I love the fact that the stock has been strong relative to the market. Orange line above zero. Market was pulling back. Stock was moving higher, breaking out to a new all-time high. Long green candle on that FOMC statement. Stock rallied hard, but it had to maintain half of this long green candle, first of all. Second of all, we needed to see a nice, strong market backdrop. Please go back and watch the video from December 16th, Thursday. It's the previous video I posted. Look at my pre-open market comments. I said, listen, we got a good chance that the market's going to be pulling back. You do not want to chase this rally because gaps up to a new all-time high have typically been faded. And I feel that the rally after the FOMC statement was contrived. It was all program driven because once the momentum was established, quadruple witching played a role, and institutions were rolling their positions and fueling the move higher. Well, those gains can easily be given back. That's exactly what happened yesterday. So on Costco, put up the 5-minute chart. I had mentioned to you that early in the day, if the market is giving back gains, you do not want to be trading. You want to be observing. Even if it's a gap and go, you need to sit on your hands and not do anything. Let the price action unfold. Make sure that the market is able to hold the prior day's gains. Well, what did Costco do? Down, down, down. Stacked red candles, very, very weak relative to the market. Orange line below zero. We trade relative strength. There is no reason to take a position in Costco. And in fact, in the first half hour, almost all of those gains into the close on Wednesday were given right back. So there was no reason to get into Costco. Okay, you get through this part of the day. Now you can actually start to see that the market was also very, very weak and that you should have been favoring the short side. Costco was the pick of the day on the long side yesterday, but I also gave you a short of the day, CVNA. Let's take a look at what CVNA did. Relative weakness to the market. And I explained why CVNA was setting up for an excellent short because of the price action that I saw on Wednesday. So you've got, put up the SPY overlay, you've got the S&P 500 after that FOMC statement. Zoom, zoom, look at that rally. The gray line is the S&P 500. Let's look at CVNA. Stock opened here, sold off super, super hard. The only thing saving CVNA from going down was a strong market. A 50-point S&P 500 rally could barely get that stock off the deck. That's because institutions are playing whack-a-mole with this stock. They are so aggressive that even on a 50-point S&P rally, the stock could not even retrace the halfway point on a very bearish day. So market up huge, stock down, not even able to get through that halfway point. Daily chart tells a story. Big breakdown here through horizontal support. Follow through Wednesday on a bullish market day. Now we know what happened on Thursday when the market opened and we started to see any kind of selling in the market. Whoosh, right through that prior day's low. If you don't believe me, please look at the comments posted on Thursday's video. I've got viewers who were posting how much money they made on CVNA. Very, very nice pick. Let's go in and let's talk about the market because that's where all the analysis starts. That's where your analysis has to start every single day. We're going to get our bearings. I'm going to show you what I did in the chat room yesterday. So here's the formation. Remember, I'm looking for a gap reversal. If you watch Thursday's video at the 4-minute and 50-second mark, I start describing why I felt we were vulnerable to a gap reversal yesterday. 3 red bars, okay. Yes, they're stacked, they're not huge, but we can see that there's profit taking right on the open. Get this nice long green bar just to check and see what's still up there. Now, if we would have stacked another long green bar here and we would have broken out to a new high, that would have been a bullish formation, but that's not what happened. So shorts are kept honest right here on that long green candle, some probably shaken out. Now we start giving this candle back almost instantly. And you can see how we had a new low right here just before the half-hour mark. Just want to prove that I'm actually doing what I'm telling you I did. Short S&P 500. This is Central Time, so this is 2 minutes before the half-hour mark. I'm already starting to short. So I'm going to continue to show you how the day played out, how I was using the 10p indicator to time my entries into my S&P 500 trades. I gave members a play-by-play account of how I thought the day was going to unfold. So in here, I took my first gain once we filled in that gap. Why? Why did I take gains on this position? Well, I've already seen kind of choppy trading in here. I've had a massive rally the previous day after that FOMC statement. I've got to be careful because the market is challenging the all-time high. Shorting is very difficult because you get these huge snapback rallies. Okay, here we go, here we go, here we go. Everything's looking really good. Ah, yeah, now the bottom's going to fall out. Boom, 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 right back up. So now, if you didn't take profits here, you're probably losing money on the trade and you're shaking out again. So I saw this chop in here. That's why I set a passive target. Now you can see how you've got these stacked long green candles. Now we're starting to see some tails above body, and we're starting to break through this upward sloping trend line here. And then we get another long red candle. If the market was in go-go mode, going to continue to make a new all-time high, you would not see a long red candle like that. It wouldn't happen because you've got bids layered all up and down in here. So as the market comes in, bye bye bye, bye bye bye, bye bye bye, you would see support. It would never get that far, but they took out all of those bids on this long red candle. That is a warning sign. Market tries to recover off of this low, and then now we're pecking through that low of the day. The selling pressure starts to accelerate. When I saw this pattern right in here, I was very, very confident of how the day would unfold. Let me prove it to you, because that's what I like to do. I like to prove to you that I was ahead of the curve on this. And so I'm going to show you a chart that I posted, and this was only about 90 minutes into the open. So you can see 10:22. So we're not quite 2 hours into the trading session, and it takes me probably 15 minutes to draw these charts because I have to do them manually. And I'd mentioned to members there is a pattern. See, there's my comment. There's a pattern setting up, and I believe we're going to see a downward sloping channel. We will chop between the upper and lower boundaries. As that channel becomes more pronounced, buyers will pull their bids and sellers will get a little more aggressive. The low end of the channel will be breached, and that will mark the low of the day. So let's take a look at that chart, and I'm going to continue to scroll down so you can see it. So this is where we were. We still had not taken out the low of the day right here. And this is the pattern that I was telling members to be watchful of. We're going to see a trading channel unfold. How do I know this? I've been doing this for 30 years. I spend hours after the close studying patterns. And I was able to identify this pattern. I felt that we were going to rally up to the downward sloping boundary, the upper boundary of that channel, and then we would start to see some more selling. Eventually, throughout the course of the day, we were going to break the low end of this trading channel. We were going to see long red candles, and then we were going to see a bullish hammer or a bullish engulfing candle when those long red candles had run their course. This is what I call the washout. So let's take a look at the chart. Let's see how things played out. Remember, this is where I'm starting to tell everyone, and this is all the information that we have at this point. Right now, still looking a little random. This is where I posted that chart. So I'm already looking for downward sloping trend line, possibility of a channel. We're going to be chopping back and forth through that channel. We're going to be looking for a downward bias, and that's going to culminate with a breakdown below the lower end of that trading channel, and then we're going to see some long red candles. Huh. There's the low end of the trading channel. You can visually see the upper end of the trading channel right here. There's your long red candle through the low end of that trading channel. There is your bullish engulfing candle. Could have been drop, rally up, bullish hammer, then go, but there is your climax, and it happened to coincide with a bullish 10P cross. Talk a little bit about that in a second and how it helps us, but yes, during the course of the day yesterday, I highlighted every trade. I spent the entire day describing the setup that I was looking for and telling members ahead of time where I was getting in and where I was getting out and where my stops were. I made 50 S&P points yesterday. Now that would be if I were trading one contract, but I don't trade one contract. So very, very profitable day, but I was able to recognize the pattern that was in play early in the day. Once we break down here, we get this nice orderly drop. Tiny little candles, so we know that we're going to be bouncing. There's the low end of the trading channel established. We bounce, upward sloping trend line, breach to the downside, bearish cross, 10P. See you later. Here, I did not buy on that first long green candle because the selling pressure has been heavy and I expected a retest. I did buy right in here, and I bought right in here because we made a higher low double bottom. This is a nice little bullish candle in here, and I made 20 points on that rally. Actually, I sold half of my position for a 15-point S&P gain, and I sold half of my position for a 25-point gain. And you can see how the upper end of that trading channel held. There was an opportunity late in the day, but I did not trade it. So very, very good day for futures. All of the gains from that FOMC statement were given back. So yes, I was accurate in saying that I felt that the prior day's move was all fluff. But I don't trade based on what I feel or what I think. I trade based on price action. It's good for me to have an opinion. It's good for me to be able to recognize when I feel that there might be fluff, but all that does is it sets the tone for me. I'm aware of it, but I am really just following price. So what do I see happening today? Well, today the S&P futures are down about 20 points before the open, so we're seeing additional selling. That's going to take us down to about 464 roughly. Well, there is some support there. Let's go into the 15-minute chart so that we can zoom out and see where 464 comes into play. 464 basically puts us back to where we were before the FOMC statement came out. So all of that will be erased. What does that mean on a daily chart? Daily chart, you can see that long red candle, that big smackdown. After a smackdown like that, you are not going to see a decent or sustained rally until the downside is tested. Well, that's already happening on the open today. So I would be favoring the short side today on the open until the market can prove to me that support is still there, that buyers are still eager to get in. I don't know that we're going to see that because the FOMC statement, in my opinion, was very, very bearish. There were a number of things in that statement where the Fed has completely changed their tone and their posture. And I pointed that out in my pre-open market comments yesterday. I'm going to be trying to scroll back to them while I record the video. But yes, the Fed is definitely a lot more hawkish than they were just 2 months ago, 3 months ago, 6 months ago. Now they're talking about hiking rates, possibly 3 times in 2022. Now, this was not even part of the conversation just 2, 3 months ago. In fact, most of the brokerage firms were not expecting the Fed to do any rate hikes in 2022. Now they're looking at 3 rate hikes, accelerated tapering to the tune of twice the pace that they were projecting earlier. So I'm going to find those comments as I scroll through, and we'll take a look so you can see what those issues were regarding the Fed, because I highlighted them. So here were some things. Fed's going to be reducing asset purchases, tapering at twice the rate. Virus variants could weigh on economic growth. This is what they said in their statement. Median forecast by Fed officials is 3 rate hikes in 2020. That's up from 0 in just the September meeting. Median forecast by Fed officials is 4 rate hikes. That's much higher than they were expecting. Inflation up by 0.7% to 4.4% in 2021. This is not what they were expecting 4 months ago. This tone has changed dramatically. So we can expect to see some headwinds and some tightening in 2022. I will tell you that when the market can't rally into the end of the year, and I don't know that this is going to be the case, but if we don't see the market get back up to this high and make a new high, or at least close at the high by December 31st, and the market starts to crack and fade from that high, that would be considered a very weak December close. We've already seen selling in November, which is typically a strong seasonal month as well. That does not bode well for 2022 and the market. Am I looking for a market crash? No. Point right now is I don't see this being a go, 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 gotta buy them, gotta have them market like we've seen for a very long time. That is a strong market. That, I believe, is starting to change. We're starting to see deeper, more prolonged drops like that and like that. So resistance is starting to build. At very least, you have to start tempering your bullishness if the market can't make a new high by year end. So today, I would be favoring the short side. We've got this long green candle here that will be support at 462.50. So the market may come down and test that support today. We'll see. If the selling pressure starts to accelerate, we get those stacked long red candles. That tells you that the trend strength is very, very strong on the downside and that we're going to see continuation today. Again, it's quadruple witching. You should expect a lot of volatility in the market. So it's not going to be easy to trade when the market does get overextended in one direction or the other. You're likely to see a reversal in there somewhere. If you see long red candles like this stacked one on top of the other without any overlap on the open today, that will be a sign that the trend strength lower is very, very strong. So watch for that. If the market comes in, you get your gap down, and then all of a sudden you start creeping back gradually. I don't want to scroll back because it'll take me too much time to do that. But if the market opens and then you've got some long green candles stacked to fill in the gap, I feel that that is a potential trap that you want to be aware of. So you start getting that rally, rally, rally. I think that bounce, and I had one of those earlier this week, so I am going to highlight it. It was a great setup for us. And this was from, and you please go back and watch this video, December 14th. Go back and watch this video. I had mentioned to everyone, listen, this is a big gap down, and this is after the PPI came out. I said, here's the setup. CPI came out last week. What happened after that hot CPI number? Boom, 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 boom. Market opened higher. How does that fit? Higher inflation. Why is the market rallying? Well, part of that catalyst was that corporations were buying back shares super aggressively, to the point to where Bank of America said that half of their volume was corporate buybacks, and that window closed because tax reform is coming. So these corporations were out there buying back their shares. CPI comes out hot, doesn't matter, corporations got to buy their stock back because the window's closing. All of a sudden it looks like, hey, the market doesn't really care about a hot CPI number, because look, the market rallied on that news. We get the hot PPI number, but that catalyst from the week before had already run its course. So this was going to lure in bullish speculators because, hey, we rallied on the CPI. Why wouldn't we rally on the PPI? This was the trap that I highlighted before the market opened in my comments. And I said, this is going to set us up with a fantastic entry point on shorts. So as this long green bar, which did not fill the gap, starts to give back half the gains right here, halfway through this long green candle, this is where I started shorting. Bottom fell out. So this is a type of pattern this morning that if we get that gap down, which would be right like this, and you get that nibble, 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 that bounce right in here, instantly bouncing, you got to be very careful. I feel that we could see another one of these excellent shorting opportunities set up, because remember, I told you, this market is not going to have a sustained rally today until that bid is tested multiple times and until it is confirmed. So you need to have that support confirmed. Otherwise, buyers are not going to be interested. They saw the hot FOMC or the FOMC statement come out. They know that it's hawkish. Valuations are at a 20-year high. They're not going to be rushing in to buy right now. They're not. They're going to wait to make sure that support is there. So it's very possible that we get this formation. Any bounce on the open, I would welcome, because as soon as it starts to give in, I'm going to know that the short side is where I want to be. If we get a long red candle and a long red candle and a long red candle, that would confirm that we're starting to get some heavy selling pressure and that we are going to have a bearish trend day. I wouldn't be jumping on that right away out of the open because we'll have already retraced so far. I would prefer to see those red candles, maybe a little bit of a bounce that can't quite get back to the high, and then some continuation on the downside. So stay fluid. Know that you do not have a buying opportunity until you see a decent round of selling this morning. Be super careful on a big bounce right out of the open, because I feel that that will set up a better shorting opportunity. That's the best scenario that I will be trading this morning, because I feel the market won't rally until we've tested the downside. So again, this is my favorite pattern this morning that I'll be looking for. Gap down, bounce, and then those gains given back easily, which traps these buyers. They have to exit those positions, especially off the low of the day. Once that's breached, see ya. So other scenario, that drift lower. I'm not going to be too excited about. I'd like to just kind of see prices maintained so I can find those stocks with relative weakness, and then we start drifting lower. Then I'll be able to short those stocks. So those are some things that I'm looking for. We're going to see some choppy trading. Something like this may unfold where you've got big sell-off, big rally. It is quadruple witching, so keep it light. On a daily chart, swing traders, this is not a good swing trading environment. It's a great day trading environment. I don't like this swing trading environment. If you've got something super good and you just want to hold it overnight, fine. So overnight swings need to be super short term. This resistance level is very firm as far as I'm concerned, and we're starting to see lots of volatility, lots of long green candles, lots of long red candles. So there's the lay of the land, and let's go in and let's see what we can find. Let's find a bullish stock and let's find a bearish stock, but let's know that we're kind of favoring the bearish side. So I'm going to go into pop bull. I haven't looked this morning to see what's lining up, but I'm going to go in. We'll take a look. VZ. Ooh, that's a nice rally there. Let's take a look at that daily chart. Got downward sloping trend line right here. Stock through it. That's a pretty significant breach right there. So let's draw that trend line in because this is a long-term trend line that has been established. And we'll connect those tops right there. And you can see we're through that downward sloping trend line. Would I rush in and buy it immediately on the open after such a strong showing yesterday? Heck no. This stock is in a massive downtrend. So you need to make sure that this is not just a short covering bounce. So I'm not crazy about this. Again, if I'm buying, I want to be in the upper right corner. If I'm shorting, I want to be in the lower right corner. VALE. Just taking a look at Pop Bull again. Nothing too impressive there for me. Pop Plus Bull. Pfizer, always on the list. You know I like it. Great day yesterday. Downward sloping trend line. I've been highlighting this. Yeah, it still looks good. Some of the consumer cyclicals are good. Let's put up the major moving averages. Always got to have those up. BMY looks pretty good. I mean, it's through this horizontal resistance and through the 100-day. Yes, it could set up for a nice day trade today. It's not going to be my pick of the day because it's not strong enough technically. Gilead, nice. Breakout, horizontal resistance, not too bad. Downward sloping trend line. Yeah, not bad. Good volume in here. GILD could set up. It's a choppy stock. PG, again, consumer staples. Consumer staples don't usually make that kind of move. This is in part a flight to safety because everybody is always buying toothpaste, Procter & Gamble, but it's also a, uh, sorry about that, it's ahead of itself. Usually you're not going to see this type of rally on a consumer staple stock, but these companies do have pricing power. They're able to raise prices and they're able to pass inflation along to consumers. So I think that's another reason that this stock might be doing well. ABBV, very, very hot. I can't chase a stock like this. I wouldn't mind doing it if I had a better market backdrop, but I would like to be in here, and we have been in here. Go watch my previous videos. We've been all over AbbVie. Very, very nice stock. So I don't see anything right now, but we're going to keep looking. We got to find that long. ARNA is a takeover. So I'm going to go into some of my other searches. Heavy buying. Roku has been hit hard. NEM was super strong, but gold has not been predictable. It's been chopping all over the place. JPM, nothing great there. When I have a hard time finding really nice bullish plays, that in and of itself is a sign. That is a sign that I should be very, very passive on the long side. When I'm able to find lots of shorts, it tells me that that's the side of the market that I should be favoring. So AVCT, I haven't seen anything that I really like in here. AA, not bad. Downward sloping trend line, broken to the upside, decent volume, good relative strength. Look at that chop. It's all over the place. It's everywhere. So not a big fan there. Here's AT&T. So telecom yesterday getting a good bid. I know I'm getting long in this video, so I'm really just now I'm going to just be scanning through to see. There's one. I kind of like MasterCard in here. Still have downward sloping trend line. I traded this yesterday. It worked out pretty well, but you can see it's got a lot of resistance. So not a fantastic stock that's building long green candles, so I'm still going to have to look. So I'm still looking for a possible decent long that I can show you. It's pretty slim pickings in here. And I've used Pfizer a number of times. All right, now we're going to have to pull out the big guns and see what we can find. UPS, not bad. So I'm going to go in and use custom search. Dang, this video is getting long. I'm sorry about this, but you can see the process. I'm trying to find a decent stock for you to buy. I'd like to see a stock that was above the prior day's high that's got good option liquidity. Okay, we've got some candidates in here, so that's decent. Let's see what else we had as far as heavy volume from yesterday. And let's see what else comes up. Okay, now we're starting to get through a smaller list right here. Let's make sure that we've got relative strength on a daily basis. Strength versus SPY, daily basis. And let's narrow that list down. So these would be the candidates that I'm looking at. I want to find something with decent option liquidity. I'm going to move this off to the side. I'm only going to be looking for daily. And this is the process that you would go through each night. I'm just clipping through, looking for a decent stock through horizontal resistance. Not bad. 50-day BG, Bungie. Just going to go through. I'm clipping through. CB, not bad. Downward sloping trend line. I like this. Decent volume in here. Not great option liquidity, but a decent chart. CTSH. Hey, I like that one. Pretty choppy stock, but not bad. Like that breakout, like that volume. Let's take a look at the 5-minute chart. Market yesterday was down, 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 down. Stock holds relative strength all day. Stock able to maintain the opening gap higher. I'm not going to look any further because I don't want this to be a 2-hour video. Lily looked pretty good yesterday. I like Lily also. CTSH is your pick of the day. Lily also looks very good. Let's use the same process. Let's find a short of the day. Relative weak. Going to be lots of stocks below the prior day low. Option liquidity. Let's see what comes up. Hey, not too bad a list here. We're going to knock through this and we're going to see what we've got. Again, this is the process that you would be going through anyway. So we're going to check these stocks. We're going to look for major technical support breaches. We're going to look for heavy volume. There's a nice one, COUR, choppy stock. CVNA, we've already seen that one. Dash, poking through this horizontal support, closing on its low yesterday. That is not a bad looking candidate right there, but we're going to continue to see if we can find something better. DT, this could be a nice pick here. eBay, that looks pretty good. Breaking horizontal support. eBay looks like it could be a decent short in here. It's below the 200-day moving average. Let's take a look at that 5-minute chart. So here's the tell. Yesterday we had that nice bounce late in the day on the S&P 500, and we'll see that by overlaying the S&P. So here's what I want to watch for on a 5-minute basis. Boom, boom, boom. Big market rally. What do I want to see in a stock? I want to see whack-a-mole, whappa, 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 whappa. Every time it sticks its head up, it gets whacked down because sellers are so aggressive. Normally, a stock is going to follow the market up, up, up. And when it can't, you know those sellers are nearby. eBay closes on its low of the day. Choppy, chunky back and forth stock. So not a big lover of trading eBay, but that's pretty weak price action. That's what I'm looking for when I flip through these charts. So hopefully I'll be able to find one. Right now I'm going to run with eBay if I can't find something better. Well, IRNT, $5 stock now, but yeah, that's a super weak chart right there. LC, very weak on that 200-day moving average. Breaches that 200-day moving average. You're going to see continued selling on that. LYV. Hey, nice horizontal support here. What do I do with that? When I see it, I put an alert line up. Breaks that alert line, I'm going to get a pop-up. I'm going to know exactly when to short that stock because it's breaching a key technical support level. NOVA, pretty good there. Just going to continue, and we already have one in the hopper, SAVE, not bad. There you've got kind of a bearish flag formation, upward sloping trend line, breach downside, 50-day holds, weakness yesterday. TDOC, that's a nice little breakdown right in there. Ooh, I like that. You could see the volume right here on that decline. That's good. Increasing volume, stock moving lower. Yep. TDOC could be, oh, there's another good one. W. Do you see the process? This is the process. This is what you'd go through every day. It's not going to take me but a half an hour to find these candidates. You got big time flagpole to the downside. There you've got a tiny little upward sloping trend line breached. That is a bear flag formation. W is an excellent short. I think I'm going to have to go with W for my pick of the day on the short side. eBay also looks like a very good short. Save, I think, could set up for a good short. There were a number of them. Go through the symbols, create a watch list. You still got a little bit of time before the open. Look for the market to pull back today And until we do that, and until we confirm that support, maybe it's a double bottom high or low, but until you see that washout and that bid confirmed, support confirmed, you don't need to trade from the long side. You should be favoring the short side because I think that we're going to give back some more of those gains. I think asset managers are going to be a little bit nervous after the FOMC meeting. We've got quadruple witching happening, so we can expect to see some two-sided price action. So market pulls back, double bottom high or low. Things stabilize. Yes, we probably could run up the other way. That's all I've got for you today. Very long video, lots of educational content. If you like the content, please give it a thumbs up. More importantly, please tell other traders about this YouTube channel so that I can educate them, help them improve their trading as well. Thanks so much. Have a great weekend. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.